Hello, this is Andrew Westhof with Homes Mortgage Lending, and this is a mortgage interest rate update for July 6, 2023. So you're probably already aware that mortgage interest rates are a bit elevated at the current time, but I want to give you a little information on why and some current news and what trends we can expect with rates, with hopefully a little bit of a silver lining especially for home buyers. So right now, mortgage interest rates keep ticking up, and today specifically, they jumped a decent amount on some news for job openings by ADP, the company that many of you probably have get your pay stubs through. So they just gave an amount of increased jobs in June, which was about twice what the expectation was. So the reason that the job increase is affecting mortgage interest rates is because a strong labor market, more jobs means more spending, which is bad for inflation. And the Fed is trying to very aggressively fight inflation right now. And their only real tool to fight inflation is to increase the Fed funds rate. So that means possible additional increases in the Fed funds rate, or much more likely, which is causing mortgage interest rates to increase. So if you go on CNBC right now, the first article is exactly that. Private sector companies added 497,000 jobs in June, more than double expectations by ADP. Tomorrow, the Department of Labor comes out with their jobs report. Should very much mirror what we saw today. If we get lucky and it's not as big of a out of the norm increase, then we could see mortgage rates drop a little bit tomorrow, but probably not much. So a lot of what we're seeing is just the rate of inflation is not falling as fast as the Fed would like it to. It is falling, but we want to get it to around 2%, or at least the Fed wants to get it to around 2%. And right now we sit right around 4%. So there's been progress made, but there's also certainly signs that inflation could turn directions and start going up, which I think is probably unlikely, but more likely is we could start seeing it plateau, which is also something the Fed doesn't want to see happen. So we get CPI inflation numbers in the middle of July. So if those are favorable, we could see rates drop at that point, but it's really unlikely that they're going to be favorable. I think we're probably going to be at these rates for quite a while. So to give you some idea of where the rates are, the current USA Today has a current article showing that rates, the average 30-year fixed conventional rate is 7.37%. I don't know exactly where they get the data for their averages. It seems pretty close though to what it should be. I'm guessing that that's at a few different credit score marks. And then I want to show you this is a little bit more of a reliable data, but the data is a little bit more aged. So this is the Freddie Mac Private Mortgage Market Survey. It comes out every Thursday at 10 a.m. And it's the average interest rate from the past week. So they take an average week over week. So it's not day over day, it's week over week, and interest rates have increased over the last week. So this 6.81% is where it sits currently. We're certainly higher than that as an average, but that's the weekly average. And I would expect that we probably see this bump up to near these high peaks over here. Which was 7.08%, was the high peak in recent history, which we hit in October, end of October of 2022, and then beginning in November of 2022. So assuming that we get to that point, and my opinion, which is just an opinion, but my opinion is that, or my prediction I should say, is that we're probably headed higher than that. But when that happened last time, the silver lining was that a lot of homes had a lot less demand for them, at least here in Southeast Michigan, where I do the bulk of my business. I also do business throughout the state of Michigan, so certainly in other parts of the state was seeing that as well, where we were seeing homes that would normally have, like right now, we see a lot of homes having 10, 15, 20 offers on them, all of a sudden have 2 or 3. So it makes it a lot less aggressive to be able to actually get a home. So the silver lining is as a buyer, you might actually be able to get an offer accepted, is it doesn't really matter what your interest rate is if you can't get your offer accepted. That being said, you still need to make sure that the payment is comfortable at this level. However, we do also, the other good news is that almost all mortgage interest rate experts do not expect these rates to stick around forever. In fact, they don't expect them to stick around for even the midterm. They think that sometime in 2024 or to 2025, rates are going to drop a decent amount, where most people will be that bought in the last 2-3 years are going to be refinancing to drop that payment down. So there's no guarantee of that, of course. So you want to make sure that that payment is affordable for you for the long term, but you're likely to see some relief. Now, if you're currently out there looking and you're pre-approved, it's not a bad idea to talk with your lender, especially as you're seeing a little bit more payment shock with the rates increasing, to run some scenarios on what would that same payment look, what would that same purchase price look like on that home if the interest rate was 1% lower or 2% lower, because those are some realistic drops that we might see. So you can go, okay, well, if I get really unlucky and rates stay there a little bit longer, again, I want to make sure that you are comfortable with that payment, because there's no guarantee that they will drop, or they might not drop for, those timeline predictions might not be as accurate as we want them to be. If they're wrong and interest rates don't drop until 2030, I want to make sure you're okay with that payment. So I hope that's helpful. I'm a licensed mortgage broker in the state of Michigan. My rates, everybody's rates right now are not great. Mine tend to be a little bit better than my competition. So if you are in the market and looking to get pre-approved or compare to who you're working with now, I'm happy to do that. Feel free to give me a shout. My contact information is in the show notes. I'm not licensed in any other states, so if you're outside of Michigan, unfortunately, I would not be able to assist you. But anywhere in the state of Michigan, I'm happy to help. Thank you so much. Please subscribe to this channel if you'd like to see some more interest rate updates. I'm planning on doing more of these in the future, as well as other general mortgage information, new programs, things like that, so that you can keep up to date with what's going on as you continue your home search. Look forward to seeing you on the next video.